Welcome to another episode of Singapore's Real Estate Explained, brought to you by the J&A Investments team. So today, we are in a brand new environment.
Studio. Yes, the brand new studio. First time we're filming over here. I mean, we have been seeing the same backdrop for a long time, so we decided to have a change of environment, and this is it.
Yeah.
So today we're going actually into a very interesting topic, part 2 of the sand. Okay,
Yes.
This is something we've done the numbers, the crunching of everything, so that we can give you a detailed analysis of whether this is a good buy.
Yep.
Okay, in fact, this by development, previously we've done it. We don't have the floor plan, we don't have the entry price, but we have it here today. So this is something that we hope to bring this value. So before you put your ballot, okay, or the number into the upcoming launch, okay, you can have a proper analysis of whether this is a good buy.
Yes. Before we get started, of course, thank you everyone for all our followers. We have currently about 214 Google reviews. So really thankful for all your support, and also for our YouTube channel. We have about 17k subscribers. So really excited. And of course, with that, we have helped over 743 investment clients with an average return on equity of about 19.56%.
So you'd like to find out how do we do investments, okay, do actually scan the QR code right below, and we will get our investment team to reach out to you.
Yes.
Right. So much further ado, let's jump into today's topic about the sand. Okay, this is the most updated numbers we've gotten. In fact, some recap we've done in the previous video. This is a project that's big development, 19,000 square meter of land, 347 units. Okay, 5 blocks of 10 story. Okay, so this is done by Sustain Land. The last event they did was this condo called Sterling. They haven't been in the market for some time, and they're back. And that's something we'll see how they price the unit later on. In terms of break-even price, based on previous video, you can see we actually sort of like was very excited for this because they bought this land bit pretty cheap. Okay, break-even is 1,006 per square feet. Okay, at 7% break-even, okay, it's 1,700. At 20%, it should be going at 2,000, which could have been the cheapest city fringe new launch in the entire market. Okay, but the truth is, we look at the actual starting price.
Yes.
Okay, they started at 2002, okay, which is, I say slightly higher. Okay, in fact, at 2324, it will bring you about 34 to 42% higher than break even, which is expected for Sustain Land, because beforehand, we see that this development by itself, Sustain Land, okay, they used to do Sterling. So for Sterling, they actually ended up launching higher as compared to that of what was expected.
Yeah.
So for Sterling, I mean, if they could have launched it cheaper, they could have, but they decided not to. So it's something we noticed for Sustain Land. They are a developer who, if they know the market price is at such, they don't launch it cheap just because they bought it cheap.
Yes, of course. So with that, we also want to recap also the land bid pricing that we shared previously. So they actually bidded the land at a way lower pricing as compared to the other recent GLS. So with that, I think why they were confident in kind of like pricing the development as such is also because we are also looking at some of the upcoming prices for the land bids also. So you see the next few prices of the land bids, they are actually going higher. So with that, I think they have the belief that consumers right now is able to kind of like stomach this kind of pricing. That's why they were daring to go into such prices also.
Yes, in fact, it's quite true, because if you look at the upcoming land bids, Dairy Farm, Lakeside, Bayshore, Chuan Grove, they're all in the outskirt region, but they're launching about 200-300 or 500 per square feet higher than that of a city fringe kind of product at the sand. So the developer knows, and they decide that, hey, if I see upcoming land bid launching higher, they like to future pace. They will say that I want to launch it higher to match the price. Even in Thomson View, okay, a better location at 1178 per square feet, developer may not end up launching cheap also. So that's always depending on the developer. Okay, they can buy the land cheap, but that doesn't mean that they will launch it cheap. So that's something you always must take into account when you buying an upcoming land bid.
Yes, correct. Okay, so with that, I think we are also looking at some of these other land bids that has been concluded, right? So the reserve, the highest PSF that was sold was 3154 when they actually bidded it at only like 1516.
Yes.
Okay, so Dunearn Road, same thing. Estimated launch price about 2.8, and then for Holland Link, estimated about 2.9. So with that, they know that the surrounding kind of other developers will be going at this kind of pricing. So for them, technically, they are still launching it at a very conservative price at 2324.
Yes, in fact, at market price, and they just want to hash the market and allow the market to pull up the prices.
Yes.
And a big question is this still cheap in the market. Okay, so from there, we're going to assess using 3 different matrix. First up, we'll look at the recent RSL new launches compared to the Sen. Is the Sen cheap?
Yep.
So the 3 launches that came out, we did discuss last time, but now we do a floor plan comparison. It's Lindenwoods, Ori, and Bloomsbury. Okay, about the same size, 343, 777, and 358 units. 2-bedder, average price, okay, you can see Bloomsbury, very similar to the Sen, not really MRT, is about 1.6 million. Ori Lindenwoods, it reached 1.8 to 1.9 million on average, up to even 2.1 something or 2.3 million for the 2+ study. Meanwhile, the Sen, the compact layout 678 square feet at 1.66 million, which are the higher side, on average maybe about 1.6 million range. They are trying to pack it very well with Bloomsbury kind of layout type. Okay, but take note, there's no 2-bed 1 bath. Unlike the previous video that we did try to estimate. Okay, so that's why in terms of the average prices, okay, it's actually quite reasonable for the 2-bed 2 bath. Meanwhile, for the 2+ study, it's 1.8 million. It's actually, I would say, at the higher end for that of Bloomsbury, and in fact much lower than Ori and Lindenwoods because of location. So let's take a look at the layout comparison. Sen, okay, one key thing about layout 2-bed 2 bath, compact kitchen for this, open kitchen for their layout. Okay, but one thing in common notice, which is a little, I would say, unfortunate, is the dining room itself is pretty tight. Okay, so usual layout, okay, the dining and the living were pretty decent, but with this dining over here, you go to a show flat, this corridor space can barely fit a 4-seater. It's actually pretty tight. Okay, as compared to that of a full-fledged kind of dumbbell layout type you see in the wall. Okay, meanwhile, for this kitchen area over here, okay, open concept kitchen, this dining is right in front. It will make the whole place look a bit claustrophobic.
Yes.
With a little bit of wasted space at the corridor area. Okay.
With that, I think even though the kitchen space is a bit tight, but I think the saving grace for this is that the master bedroom, the size is still quite sizable, right? Even with a big bed, like king bed inside, there's still some space to walk around as well. All right. So with that, we also want to look at the 732 square feet as well. So with that, this has a closed kitchen, but the walkway is quite a long one. So a little bit of wasted space here. But with that said, I think the dining compared to the other 6, 7, 8 square foot, I think this has a little bit more space. And then same thing for the master bedroom, you're able to put a king bed and then there's some walking space as well. So that's the 2-bedder one.
So when you look at the price of 1.66 million to 1.8 million, as compared to Lindenwoods and Ori, you can see it's actually pretty close to these two prices when these areas are in better location. And for Bloomsbury, it's actually priced, I would say, about the same price or in fact slightly lower so that they can actually hedge the prices. But in short, final verdict is, I would say this is the average price, not like undervalued or good value, but rather of market value. So this is something you have to take into account compared to new launches, and from there, be able to find what is your walkaway price.
Yes.
So for every single project, okay, we always have this called walkaway price to make sure that we don't end up overpaying. So of course, if you're keen to find out more, then we can scan a QR code, and we're more than happy to assist you to give you a second opinion.
Yes.
And next, 2+ study. The Sen 2+ study, okay, did a better layout, okay, than 2-bed 2 bath. Comes in with the study, dumbbell layout, pretty big living area at 1.87 million. Okay, the other one is also about 1.898 million. The only one downside is the kitchen. Like, I mean, they could have done a better job putting an enclosed kitchen, important nowadays for a lot of new launches. But it's a pretty open concept, which actually gives it, like, I would say, a downside, a not so good point. Okay. And when you compare it to the other layout type for Ori, Lindenwoods, and Bloomsbury, you can see Ori, they price it as such. They have an enclosed kitchen at 2+ million. Okay, the last transacted at a high floor on average about 1.95 million. I would say the Sen is priced comparatively because of a poor location.
Yes.
Compared to Bloomsbury, potentially Bloomsbury could have been a better hedge in terms of prices, about the 1.8 million range as compared to that of your the Sen. Okay, so I would say once again the 2-bedder average price not undervalued, not like very good price compared to the market value.
Yes, correct. Okay, so with that, we also want to go into the 3-bedder. So looking at the prices wise, so the average pricing for Ori, Lindenwoods, and Bloomsbury, like we mentioned previously, is about 2.3, 2.6, 2.8. Looking at the rough gauge, I can say then the 3-bedder is actually priced quite sensitively in that sense, right? So with that, we also want to look into the layout itself to see how the layout perform for the 3-bed 2 bath. So first one, we want to talk about 3-bed 2 bath. There's 2 layouts here, so 872936. So I will say in this case, it's also quite a good layout, to be very honest, right? The kitchen, even though it's at the start, but there is a chance that you can actually enclose it. And then because it's a dumbbell layout also for the 872 especially, so there isn't much wasted space. Dining is in the middle, so it has a very elongated living room.
Yes.
Same thing, I realized the thing for the Sen, right, the master bedroom, right, is huge. They can always put a king size bed and then there's still some space to walk around also.
Yeah, so it's very plus point, and they did have Asian layout. So this is something that I would say great. This is one of the better layouts compared to 2 bed, 2 bath. Okay, and starting price 1.94, actually pretty cheap when you compare later on with some of the launches in the market and also some of the surrounding launch you see in a while.
Yes.
Meanwhile, for 936, they managed to do a pretty good job also. They managed to squeeze in a utility room. Okay, walkway space not too bad. Okay, in terms of foyer area. Okay, and the living room and the dining room is perfect.
Yes.
Yeah, so very ideal layout. Screen 936 and utility, a flexi room with a decent bedroom 2, 3 and a master bathroom. At 2.2 million, this I would say the higher side of the prices. I would say they price sensitively to move for the 3-bedder. So this is something I would expect it to be able to do well.
Yes.
Okay. And then when compared to your surrounding Lindenwoods, Ori and Bloomsbury, I mean all the launches that came out, you can see that this is one of the, I would say, better price hedging. They have against all these kind of RCR launches that came out recently. At least a 400k below. Okay, and Bloomsbury about the same prices, and the difference is the Sand 872 square feet have a storeroom, which is a good thing. That outbeats that of some of the Bloomsbury residences for the 3-bedder compact. But at the end of the day, is whether you're lucky you're gonna get a unit there. Okay, but based on 3-bedder layout, this 2 compact layout, likely it will move very well and it will go. Which is some people who get it, you're lucky. If not, then it's always about whether you can find a better alternative elsewhere.
Yep. Okay, so for the Sand, they also have 3-bed, 3-bath format as well. So of course, while they have a long walkway, I think something interesting is they have the separate wet and dry kitchen, and then the living room is slightly different, not the elongated one. They have actually a dining right behind the living room as well.
So this one called the landscape living room area, where you have a long balcony. The place looks slightly bigger.
Yes, correct. So with this comparing to Ori and Bloomsbury, I think the pricing wise, I would say it's kind of like in between Ori and Bloomsbury, which makes sense. For Bloomsbury, it's actually slightly smaller. So yeah, it makes sense that the price is lower. But then if you compare to Ori with a better location, the layout is also slightly better. I would say not as much wasted space. So yeah, I think with that, though it's priced sensitively, I think ultimately it depends on what is the actual price that you're entering into also.
But in short, for me, comparing to Ori, I feel it's on a slightly pricier side. We can get better location, functional layout for something about 2.7 million.
Yeah.
So I would say, compared to Ori, I'm not a fan of this 1109 square feet unit. More of the 872 and 936 may be a better exit and better selection in this process.
Okay, with the Sand, of course, they have 3-bed, 4-bath as well. So it's a very big layout.
Yes.
They have your wet kitchen, dry kitchen. Same thing, they still have the household utilities. But of course, they have the powder room, something that is not
the 4th bathroom.
the 4th bathroom. We don't usually see in a 3-bedder. Yeah. So with that, comparing it to Lindenwoods and Bloomsbury, I would say similar price as Lindenwoods. But of course, with Lindenwoods, location-wise, if we have something that is of a similar pricing, then I think something to consider would be the location lah.
Yeah, so yes, indeed. In fact, this price is pricier as compared to a City Fringe condo, where you have Lindenwoods next to Cambridge MRT selling the same price. So it's not really cheap at all. But why the developer came on this layout? It's potential to cater to own stay buyers.
Yeah.
But you know that people in the area, they want big floor plate. And then these group of buyers, they will pay a premium because they want something in the area that's new. So they potentially cater to that. But let's see how it goes during launch day.
Yes.
Okay. Last one, let's take a look at 4-bedder City Fringe new launch comparable. You can see on average 3.2 for Ori, 3.8 for Lindenwoods, 3.2 also for Bloomsbury. The same, you can see the 4-bed is massive. 153 square feet at 3.5. Okay, interesting. They're really trying to go for big size unit.
Own stay buyers.
Own stay buyers. Okay, it may not move as fast, but you can see big dining, big living, landscape balcony. Bedrooms are big, master room extremely big. Junior master also decent size with a study, so a 4+ study, wet kitchen, dry kitchen. 1453 nowadays is almost some equivalent to some of the even Ori 5-bedder kind of size. Okay, but they squeeze it in because they know that some own stay buyers, they love this area, one is the location, and they like big size unit. So Sustainland did cater to this. And when compared to that of the 4-bedder in the City Fringe, okay, then people say Lindenwoods, okay, 4.18 million, which interestingly you see in the area, people just snap and buy, even though the content is huge. Because there's a natural demand for big floor plate in the area, which is surprising, but people still do consider and willing to buy for own stay. Okay, Mount Ori, about 3.7 million, almost sold last 4 unit. Bloomsbury, 3.6 million for the bigger layout type. So the Sand, they did pack it against the surrounding or the city fringe property to find whether it's cheap, which in this case, they do pack it at the average price.
Yes. Okay, so of course, after looking at the new launch in the region, we also want to look at new launches surrounding the Sand, right? So number one, definitely we'll be looking at the reserve residences. So we have looked at the average pricing of 2-bedder, 3-bedder, and 4-bedder. And then we can also take a look at the comparison of the layout and then to see which one, how are they actually pricing it against the reserve itself. So the first one, of course, the 2-bed, 2-bath for the Sand, we have run through it. Comparing to the reserve itself, I would say it's almost the same, but of course, the Sand is priced sensitively as compared to the reserve, 1.6 against 1.8 mil. All right.
But do take note that the transaction is 2023, so about 2 years ago, and reserve is a much better location next to BTO MRT, integrated. Yes. So I would say this premium that is given, I would say in the past and now, you'll be putting the Sand at also at valuation price.
Yes, correct. Okay. Then next, same thing for 2-bed, 2-bath for 732. Again, comparing to it, the pricing is almost the same. Not almost the same, about 100K difference. Yep. But of course, this one has a slightly bigger layout as compared to the reserve.
Yep. So the good thing is an enclosed kitchen as compared to one that doesn't have it. And this size is comparable, similar from what we see just now.
Correct. All right. Okay. Then next we talk about 2-bed, 2-bath plus study. Okay, so with that, they also have the 2-bed plus 2-bath plus study layout they want to look at. So for the reserve itself, we all know, I mean, for the Sand, it's the open kitchen one. Similarly, for the reserve, it's open kitchen, right into the walkway is open kitchen, and then there's a dining area as well. So this one, I would say actually as compared to the Sand, the layout is slightly weirder. The dining area is actually blocking the walkway. But you have a big living room. But that said, I think looking at the price itself, right, they are transacting at about 2.1 million at 807 square feet. So definitely is higher than, so I would say for the Sand, the pricing is quite safe as compared to the reserve itself.
Correct. But of course, once I factoring in that the reserve next to MRT, integrated, I mean, 300K difference, and that was 2023 price, would have been, I would say, putting the Sand at a reasonable pricing in this area.
All right. Right. So with that, next we talk about 3-bed, 2-bath. Then, so the Sand comparing to the reserve itself, actually the pricing now you can see is slightly closer already. So similar to what Chris shared earlier, with the factors being it back in 2023 and all, I think yes, it's definitely in the similar pricing right now. And then the layout wise, I think this is definitely an enclosed kitchen. But the thing is, for the Sand, they actually managed to squeeze in a utility room. For the reserve, they don't have it at all.
Yes, right? And also one more thing, it's very funny, this layout, the master bath. They have an awkward shape. I don't know how people will see it later on. But we have a long walkway over here for some wasted space here. But other than that, do take note, because they bought at 2.332 million, that was 2023. 1 year later, which is very soon, they hit the 3-year SSD, sales and duty. They're selling with potentially 2.6, 2.7, and that will set the new benchmark of the Sand. By using this comparable, I would say once again, over 400K difference for better location, etc. If they were to sell higher, it does put the Sand as, I would say, average price once again. So not undervalued, but I would say average prices.
Average pricing, yes, correct. So for 3-bed, 3-bath, this layout, I mean, just first look, you know it's a little bit weird already, right? The layout itself. So they do have a store here, but compared to the Sand one, I think it will be slightly smaller. But with that said, they do have this flexi space that links to a back door, which gives you a little bit more flexibility in that sense. But just look at the pricing, I would say 3.4 million versus a 2.7 million. I think, the pricing is definitely way higher lah. For the Sand itself, definitely will be a kind of like safer quantum at this point, comparing these two.
Yeah, but one thing note is not just comparing these two, you also want to compare the resale we've seen in a while. So it's when you look at property, it's not just like comparing city fringe property, comparing the surrounding new launches, but what exactly is the right value, which the resale will actually give us a clearer understanding. All right.
All right. So last one, 4-bedder. 4-bedder reserve residence is huge. 1991 square feet. So you can see this has a very regular layout already compared to the ones that we saw earlier. So a huge space for dining, you have your kitchen, you have your yard at the back, definitely utility space, and then your master bedroom. So it's a very squarish layout. But that said, of course, the pricing is different. It's almost a 1 million difference. Let's say we give a difference. Even if we were to give the sand like the buffer premium of about another 500k, it is still at least 800k difference.
Yes. So it's really, so that's why I guess the sand, if I know about this, that people like to buy big unit here, 5 million new hitting in that reserve residence area. So it's a 3.5 should be fine, and let's see how the market reacts. So interesting they did this.
Correct. So with that, we have actually seen the reserve. They actually managed to clear almost their inventory, all their inventory except for last 2 5 bidders.
Yes, so you can see the demand over here is pretty strong. I mean, people are looking at this purely as like, since it's clear own stay, then developers, hey, I think there's demand here. Let's push and see whether the market is willing to take even at a higher PSF.
Yeah, so I think with that, it also kind of like makes sense why even though they bid the land so low, they still launch at such a pricing, because they do know that the market is accepting of these prices really.
Yes,
all right. So the other one we also want to look at is 8 at BT. So 8 at BT, I would say it's a slightly smaller development.
150 something units.
Yeah,
boutique
correct.
development.
And the pricing is also 2 bedder is about 1.9, 3 bedder is about 2.8, and your 4 bedder is about 3.5. So let's take a look at the layout to see how it fares against the sand itself. Okay. So first one, 2 bed, 2 bath. Of course, we look at 8 at BT right now. It is it sounds bigger, 732, of course, but then just look at the second bedroom. Just look at the second bedroom. We know obviously it can only fit like a super single. So comparing to the sand itself, both rooms can put a queen size bed. You can see how well to utilize the layout is for the sand.
And one more thing, this 732 square feet does include the aircon latch. It's pretty harmonized. And one very interesting thing, which I'm trying to figure out why AIBT don't have this, which is very, very interesting. They don't have a balcony.
Yes.
Yeah, so they cut it off because potentially facing to a road, there's some like danger if they had a balcony in front. The only saving grace they had is a storeroom, which helps to really boost up the I would say the value. But in short, even at 2.18 million, it does put the sand at a very cheap kind of prices in the 2 bed 2 bath in this occasion.
Yes,
right.
correct. Okay, so next we look at the other 2 bed 2 bath also. So comparing to the other one, of course, same thing. Comparing to 732 of the sand, again, even though they have the long walkway, the 2 bedrooms, I think it's quite clear that it's definitely way more usable. And of course, the pricing wise, you can take a look. 1.7, 1.8, comparing against 2.1. It's definitely packed at a safer pricing.
Yeah, so 300-400k below that, the only plus point I said ABT is the storeroom.
Yes.
That's the only saving grace.
Correct. Okay, so next we talk about the 3 bed 2 bath for 8 at BT. So looking at 8 at BT itself, this is where the balcony comes in, right? They also managed to pack a household shelter in. But again, look at the bedroom too. It's still, they can't even put in they can't even put in a wardrobe for them. It's literally just a queen's bed. Like single bed, you can't even put it in. So I think looking at this and then looking at the pricing of about maybe 2.1, 2.2 for the sand comparing to 2.9, yeah, definitely the layout will make it easier for the sand to exit. Pricing, the entry price is definitely better than ABT already at this point.
Yep.
Okay, and last but not least, we have our 4 bedders. So 4 bedders for ABT. This one, again,
bedroom 4.
Bedroom 4. Cannot squeeze. I have no idea why they made one of the bedrooms so small again. But then for this one, the interesting thing is just now no balcony. Now this balcony is very, very big. It's almost like the living room size. Yeah. So with that, I think comparing to the price itself, I would say it's similar in terms of pricing, 3.5, 3.5. But then if you look at own stay perspective in this sense, then I would say maybe the sand layout will actually work better for our own stay buyers.
This is especially so in this area where a lot of landed buyers, they want a big space, they want to downsize to here, or they used to stay in the older condo, they are very used to this kind of space. So once you have one room that is smaller, they don't see it as a full 4 bedder. It could be just like a 3+ study. And that's something you have to take into account. Not just buying blindly into just, I would say, they say, well, same price, etc. But it's not really apple-to-apple comparison.
Correct. Okay, so quite clear. We can see the performance of it at BT comparing to reserve. It's about 56% only.
Yeah, but total 150 units. Boutique development, very normal. The fact that they hit 60%, I think is really pretty not bad. But you sure you can see, even something like this, a 4-bedder, 27 units available, no one is
Only
taking it at all because of the price tag and the layout problem. So these are some things that you need to take in mind and potentially be able to assess whether a project can buy or cannot buy.
Yes, correct. Okay, last but not least, we also want to look at some of the resale performances. Previously, we covered a bit about Verdale and Daintree. Today, we added one more, Forett at Bukit Timah. So while we have run through some of these numbers and performances already, today will be more about the layout and then the comparison of the pricing. Now that it's out lah, right? So looking at the trend now for the current trend in terms of PSF wise, we are looking at a rough range of about 1.9k to 2.3k with Forett being the highest. So with Sand coming in about 2.3, 2.4, I will say roughly at the price where the market is accepting. I think again it goes back to the strategy of why the developer dare to go so high even though the land was bidded
Lower, yeah.
Yes,
I guess one is why Forett is so 2003 is also because it's a freehold.
Yes.
Within this leasehold enclave. So it's something you need to factor in when compare later on to see what exactly is the right price to enter for the sand.
Yes, correct.
Right. So first condo we have Verdale. Okay. So it performed decently. Okay, the 2-bedders. Okay, look back then 2020 they bought it below the market rate. Same thing for the price tag, they bought it below the market, and that's why they're able to perform decently for the 2-bedder. Okay, and you can see right now. Okay, the 2-bedder transaction are going about 1.34 to 1.47 million range. Okay, at 732 square feet, and the 2-bed 1-bath is about 1.24 million. Okay, but let's compare the 2-bed 2-bath because that's the only layout that's available at the Sand. You can see over here the 2-bed 2-bath for the Sand at 1.6 million, okay, 1.7 million range. I would say it's actually about close to 200k higher than the Verdale. Okay, when Verdale has an enclosed kitchen, 2-bed, 2-bath, decent size, living area, I would say about similar. Okay, and that actually does put the Sand, I would say usually this kind of matrix should be 150k higher or 100k higher, but now it's 200k higher, so it does put the Sand at a slightly disadvantage when it comes to the exit strategy.
Yes. Right. Okay, so next we'll look at the 3-bedder as well. So I would say they entered, back then when they entered, it was about 1.7k for 1.7 mil, sorry, and 1.7k in terms of the per square foot. And then now they're actually transacting at about 2 million. So I would say did pretty well. Okay, 2.2, 2.06. So going to the floor plan itself, comparing Verdale to the Sand, I would say comparing the layout itself, I think the Sand definitely stands at a better place in terms of exit next time as compared to Verdale because they do have the utility room, which Verdale doesn't have.
Yes, so the Verdale is 1.73 also for a reason because if you're compare, you should compare to 1001 square feet, which interestingly you see people are willing to pay $300,000 more. That's for utility room because that place people it's more family stay and they really want a place where they have a proper utility. That's why for the Sand they were quite smart. They decided to hey, I just going to do up the utility regardless. It's a must, and then from there they price it very close to Verdale 1001 square feet unit so that they'll still be able to cater to a group of people. Okay, but meanwhile if you compare Verdale and compared to 1109 square feet to the Sand unit, then it will be too much. Okay, because 700k difference for something like this doesn't make sense, but the only one that kind of makes sense and what I would consider is the 3-bed 2-bath, the Sand 936 and the 872 is ideal. But anything bigger than that, I would say there's definitely a risk that we have to take into account.
Okay, so now looking at the floor plan for the Sand versus Verdale as well. So because there wasn't any resale transactions, this was based on the last transacted at 2022. So with that, they transacted about 2.6 million back then for a 4-bed 4-bath. Decent layout actually. So comparing it to the Sand right now, which is coming up at about 3.6 million, there is actually a $1 million price tag, though it's about 3 years difference.
Yeah, but today what we see over in the market, they are all listing about 3.2 million. And the fact that no transaction happened, it just means that the market may not be accepted to the price yet.
Yes.
Potentially you're waiting for the Sand to see what price you do before committing to a deal. But if you see that in the market 3.2 and no one's buying that unit, entering into this kind of layout type in the area when it's like outskirt OC, I feel like it's RCR, city fringe, but one road across is OCR, it may be presenting a high risk. Okay, the only saving risk is this layout is bigger, with a big living, big master bedroom, but it doesn't save away from the fact that people are still not willing to accept the kind of quantum range yet in that area.
Correct. Okay, but of course with that Verdale, I would say the resale, there is still some profitability, looking at about 400, 300k. But if you notice, it's the 1001 square feet, which is the 3-bedder, that's actually profited the most lah.
Yes.
So seems like for Verdale, this is the one that actually performed the best out of all. Okay.
Yep. Okay. Next up, let's take a look at another resale, which is Daintree Residences. Is one of the one that closer to Beauty World, okay, but still quite deep in. Okay, and Daintree back then, if you know the backstory, 2018 they launched. It was very close to the market price. It was slightly higher than the market. And then after that, what happened was they actually dropped price, 5% drop price. And those who bought after they dropped price, like one of my clients actually bought it. Okay, today they make quite decent returns. You'll see in a while. For 2-bedder, okay, when they launched, it's actually slightly higher than market price. Okay, and right now you can see some of the 2-bedder 710 square feet trades at 1.43 million. Okay, the bigger 775 square feet 2 plus study make 1.6 million. Okay, and now in compare layout to layout comparison compared to the Sand, okay, for a 6-year difference, you can see the Sand at 2A 2 bath over here compared to that of Daintree. I would say it's 300k difference. Not very ideal for me. Usually it's 150k to 100k, so it does end up being poor Daintree Residences a little higher than the prices. Okay, and then when compared to the 775 square feet with a study, which I don't call a study, it's just a corner,
Open space.
open space up. They call it a study, which is interesting. But you can see people value the bigger layout type 1.6 million at a 300k difference. I would once again put the Sand at a not so undervalued prices. I would say slightly above the average price. And next, let's take a look at the 3-bedder. The 3-bedder over here, you'll notice Daintree, they launched it at 1671 per square feet size, smaller or less as compared to the RCR region. But after that, they did deep price. Okay, and down from the original 1.72 million to even 1.6 plus million. And those who bought back then today, they are reaping crazy profits. Okay, about 700k of gains for the 3-bedder premium. So if you want to get something like this in the area, get a 3-bedder, we have a storeroom, is actually the ideal layout type. When compared to the layout today, the 1109 square feet, this is actually a pretty good layout. Okay, we have a study, like a flexi room, along with a big living area at 2.3 million. When compared that of the Sand, okay, surrounding, you get about a 2.1, 2.2 million. I would say, okay, great. The layout to layout comparison does give you a competitive edge. Okay, but then when you move on to the 1109 square feet unit, I would say maybe comparable you want to compare to is actually the dual key unit at Daintree, 1152 square feet, also about 2.3 million, about same. So you can see dual key doesn't always mean that you can sell a higher price in the market. But in short, it once again put the 1109 square feet, the Sand, at a risk over here, despite having a bigger dining, bigger living area with a dry kitchen. This is a risk that we had to take if you would enter at the wrong price in the Sand. So next, we have the 4-bedder for Daintree. You can see the PSA launch, because you know this is rare to find. They launched at 1,008 per square feet. But do you know after that they actually dropped price okay, later on for Daintree. Same thing when they launched at about 2.7 million. They actually dipped the price to about 2.6 later on. Okay, so when you see today what they're transacting at about 3.2, 3.35 million. Okay, and that's potentially one reference point that the Sand took to launch their 4-bedder. And when you look at the layout for Daintree Residences, 3.25 million, 1485 square feet. It's actually pretty decent. Okay. In fact, landscape living room, balcony, and even have a private lift, which the Sand did not have. Okay. Dining area, which is much more spacious. Okay, with 4 bedroom and even 1 junior master with the dumbbell kind of layout. So it's a very good layout. In fact, 1485 square feet, no wonder hitting a 3.25 million as compared to Verdale, which is further down, not so great, and that's why it's not more as taking that kind of price when they can buy something in Daintree Residences. And if this were to launch at 3.5 million, the fact they want to sell at 4 to 4.1 million, that's a risk that you must be able to swallow. Okay, because you can get something even better in the market around, in fact, in Bukit Timah area that can get something similar as a 4-bedder. So it's something that if you're keen to find out where the better deals are, okay, just scan the QR code right below, and we will actually do a power review of portfolio to see whether there are better deals in the market as compared to 4-bedder at the Sand. Alright. And as a profitability, Daintree Residences have been doing pretty well. The returns for the 3-bedder premium is about 400 to 500k. Okay, the 4-bedder is 700 plus k. And of course, you buy at the right price. Okay, and that is when we see that in terms of demand over here, it's pretty high as long as you buy the right layout type and the right prices. and we enter into the new launch market.
Yes, correct. Okay, last but not least, we have Forett at Bukit Timah. Alright, so for Forett itself, same thing we first look at two-bedder, right? So they came in at about 1.9 when the average was about 1.8k, and then but the pricing is actually slightly higher at 1.3 mil compared to 1.2, which is the market average.
Yes.
Recent transaction though, they are actually closing at about 1.7 for the bigger bigger square foot, sorry. And then, but on average, it's closing at about 2.2, 2.3 per square feet, which is quite a good gain, I would say. Okay, so going to the floor plan itself, I would say comparing Forett to the Sand itself, it's quite decent. Same, it's dumbbell layout. And then for the kitchen itself, actually for Forett, you can actually close it, but the unique thing is it's actually in between the living room and the master bedroom.
Yep. But then layout, I think is pretty decent of an enclosed kitchen. Actually, this itself is something worrying for me. At 1.7, 1.8 million range, it's very close to the 2-bed 2-bar price for the Sand.
Yes.
So this does put the Sand at I would say at a risk. Okay, for just to look at this case to have a comparative, because the Sand is 99 year, Forett is freehold, and both are very deep in. When people want to buy this, they will say, okay, why not concept Forett next time? Maybe 1.8 million, 1.85 million. It's compared to the same. When you want to sell later on, and maybe like the 1.9 million, you're stuck because you have a better comparative nearby. And this even comes with a storeroom. It's quite decent for the Forett unit. And a 2-bed 2-bath, that's something that I always have a concern in this area for OCR. People are more into the 3-bedder rather than 2-bed 2-bath. So that's something you must take into account when factoring into the entry price. And as well enter cheap price, yes, you can make, but all these are factors you do have to put into consideration enter in this development.
Correct. All right. So next we talk about the 2-bed plus study as well. So for 2-bed plus study for Forett, I would say similarly, the last transacted was about 1.7 mil compared to 1.8. Which is what the Sand is going to launch at. Again, it's something slightly worrying because really the layout from Forett, if you can see, right, they have actually really a separate dedicated study, right, for this. Of course, there isn't a household shelter, but then the kitchen is actually enclosed.
Enclosed, yeah, as compared to open concept over here. So I would say put apple to apple with Forett actually. Both are very deep in, not very near MRT. People may just say, okay, why don't I consider a freehold unit, excluding leasehold? And that itself may cap your exit strategy, exit prices, because people always compare apple to apple when it comes to buying a 2-bedder in this region.
Correct. Okay, so next we talk about the 3-bedder itself. So 3-bedder, same thing, they actually entered slightly higher from Forett itself, entering about 1.893, while the average is about 1.8. And then pricing wise, entered at 1.9 mil compared to 1.7 mil, which is the market average. But that's it. Look at the gains. Look at the pricing now, 2.5, 2.6, 2.4. You're actually quite a decent returns, I would say, for Forett itself.
So when you look at the 3-bedder floor plan for Forett, you notice 90 square feet, 2.425 million. Decent bedroom size, storeroom, enclosed kitchen, ideal size, about the 2004 per square feet range. So by answering a fuel premium about 100k difference of 2.3 million. Okay, of course, if you buy the higher floor, there may be a risk. Okay, that's closer to the freehold premium. But by the 872, the 2 million range, you're still safe because we want to exit about the 2.4 million kind of exit prices. I mean, Forett by then may have gone up to 2.5 to 2.52, and then you are not, I will say, able to afford it, and that's some buyers will end up going for the 872 or the 936 square feet unit if the entry price is correct. Right? And then when you compare to the bigger unit type, the ones with 87 square feet, 3-bedder with a storeroom, at 2.58 million, I would say it does put 936 and 872 square feet even better. That's the price gap difference. But when compared to 1109 square feet, same thing. The risk that I would say, why would people buy a 3 million, again, 4 years down the road, 1109 square feet unit, 99 year, when they can buy a freehold elsewhere at 2.7 million. So this is a risk that you have to really consider. And when it comes to exit strategy around the same area. Right.
Okay, and last but not least, we look at the 4-bedder for Forett itself. So again, same thing, they entered quite high as compared to the average previously. So about 1.9 per square feet compared to 1.7, and then 2.6 mil compared to 2.2 mil in the market average itself. But with that said, of course, again, look at the returns, look at the profit. I think quite a decent profit in terms of performance itself for four bidders, right? So we look at the floor plan also. I will say again, for Forett, it's quite decent. Again, a very nice household shelter size with a good kitchen size as well. And now, of course, all your bathroom, all your bedroom is able to fit queen size bed. Then now we want to look at the pricing. Okay, we have 3.1 million for four bidder in Forett, comparing to a potential launch of 3.6 for the Sen itself. So definitely, I think that's where the pricing might have been a little bit aggressive. But again, let's just see. If you are targeting a on-stay buyer, I think this could potentially, we have to see how it performed after that.
Yes, indeed. So you can see the difference over here, 600K for 99 year. The only saving grace you can see for this layout type is actually the dining and living. It's actually much bigger as compared to the dining living over here. We have a bigger kitchen, wet kitchen, and the utility room at the back. Okay, so I would say layout-wise, you also have a bigger master bedroom. So some of you may prefer the bigger layout types compared to something that's a bit compact like Forett. So not apple to apple, but I would say the closer comparison is actually the 3.3 million one, the 1582 square feet, which is still, I would say, very close to the same price as 99 years Sen. So it's something you have to take into account when it comes to exit strategy. We'll be able to choose yours over a freehold unit that is nearby.
Okay, so looking at the profitability, I think we also seen we have huge gains for Forett itself, 700K, 600K, 500, 400. So definitely I would say for Forett itself, they did quite well. I think given that the entry price that they went in, it was quite acceptable by the market for a freehold property.
Yeah, so it's actually having a premium over the average because it's freehold.
Yes.
Yeah, so something doesn't mean freehold, leasehold. The key thing is really about what price you're entering at and what's the exit strategy you're looking. So with this, we'll come to the end of this video. And as usual, I heard that some people actually skip to the end of this video just to know our answer. Okay, we are always doing this thing called buy, wait, or avoid. Especially if you had the price with the layout, we should honor that. Okay, so let's give an example. Right now, we're entering to a 3-bidder in the Sen. In this case, should we buy, wait, or avoid?
Okay.
All right. Answer ready? Okay.
Yes.
So 3, 2, 1. Wait. Okay. Why wait?
Because I think comparing with the prices, especially with the resale and the new launches, I think they are not really going in at a very low price as compared to the market. Even though their land bid is very low, but they are quite aggressive in their pricing. They go at market value. So to me, is this the only option we have, or are there other options in the market that we could potentially buy lower? So if there are, then I might not consider the Sen.
Yeah, okay. Absolutely similar to me. I said I always not look at this project itself. We actually look at the whole entire market. Are there better inventory in the market that's really already existing that selling at a better price? And that's when we do home units like this to consider rather than rushing a project and going to the hype. End up buying a high price. And the key always, why I say wait, is always there's a thing called walk away price. Doesn't mean that you just say, okay, I'm not going to go for this project or it's a bad project. It's always knowing what is a strategy when going into the project, have this walk away price, and from there being enter at the right price and being able to get the right unit at the right entry price so they can exit at a higher profit margin.
Yes.
Right. So with this, I hope they enjoy analysis of this video. We haven't been doing such detailed analysis for some time because you want to be like more short and sharp, but this part 2 is always more detailed. So to give sophisticated investor a greater understanding how we dissect the property value. So with this, we'll come to end of this video. Okay, my name is Christian.
My name is Zach.
And see you next time. Bye-bye.
Bye.